If you're worried about serious tax problems if the IRS audits your income tax return, then I made this video for you. This video is intended to help you understand when you can stop worrying about an IRS income tax audit. My name is David Holtz. I'm a former Internal Revenue Service attorney and partner at Holtz, Lavin & Dropkin, a law firm consisting exclusively of former Internal Revenue Service litigators. To answer this question, you need to understand the IRS Statute of Limitations, which are the time periods after which the IRS is prohibited from taking certain actions against you. However, you also need to understand how the IRS practically works from the insider's point of view, because even if the IRS is not restricted by a statute of limitation, if you understand how the IRS works, you can understand when the IRS is highly unlikely to begin an examination or an investigation. Now, in the first part of this series, I'm going to discuss the two most important limitation rules. In the second part of the series, I will discuss the special rules that apply when the IRS can prove tax fraud or tax evasion. And in the third part, I will give you some insights as a former employee of the IRS into how the IRS actually works so you can get a better idea of when you can stop worrying about an IRS audit. Please understand that there are many statute of limitation rules that can be complicated. This video is intended only as an overview of the general rules that apply to income tax returns. For a complete analysis, I recommend that you contact an experienced tax litigator. The first and most important rule is the 3-year rule. The IRS has 3 years from the filing of your income tax return to send you by certified mail a letter proposing changes to your income tax return. That means that the IRS has 3 years to begin the audit, gather all the information, calculate the errors, and mail you the letter. This is the most important rule because the IRS Audit Division primarily revolves around this rule. And since the IRS has to complete the audit and mail the letter within the 3 years, as you get closer to the end of the 3 years, it becomes less likely that the IRS will begin an audit. In the third part of this video series, I'm going to discuss these types of issues in more detail. The second most important rule is the 6-year omission of gross income rule. If the IRS can prove that you failed to report 25% or more of your gross income, then the IRS has 6 years from the filing date to mail the letter. This is a very important rule, however, not because the IRS is likely to begin an audit exclusively based on this rule, because the IRS generally does not open audits after the 3-year rule expires. Instead, the 6-year rule is most often asserted by the IRS when unreported income is discovered during an ordinary audit that occurs within the 3-year rule. Again, in the third part of this video series, I'm going to discuss these types of issues in more detail. For the purpose of these rules, a tax return that is filed before the due date is treated as having been filed on the due date. And as you may have noticed, if you have not filed your tax return, then the IRS can begin an audit at any time. This is the end of the first part. Thank you for watching, and I encourage you to watch the second part of this series where I discuss the special rules that apply when the IRS can prove tax fraud or tax evasion.